Welcome to the keynote panel titled Sustainable Actionable Strategies, Turning ESG Strategies into Action. My name's Charles Vivian. I'm a director of Tavistock Communications. And joining me on the panel is Richard Williams, who is the executive chairman of Bunker Hill Mining. We've got Danny McNeice, who's the sustainability manager at Pensana PLC. Trevor Jones, the CEO of Lynx Global Intelligence, and Andrew Sparke, chairman of Q Mines. And thank you all very much for joining us. I'm going to start it off straight away. We've got about 50 to 50 minutes to try and get through a few questions. As you can see, we've got some mining people, we've got some investment people, and also we've got some intelligence people, as they say. So I'm going to ask the first question to Trevor at Lynx. And really, how well do you assess miners' ESG reporting to date? And what do you think they're doing well? Or do you think they're falling a bit short at the moment?
Yeah, thanks so much. And great to be here, Charles. Appreciate it. What I like to say is that we're all in this one together, right? So, ESG reporting and ESG as an acronym it's a nascent term. It's still quite emergent. I think much of industry is still trying to wrap their heads around exactly what kind of metrics and data we can be pulling in to really express either, gaps and challenges or successes and opportunities with ESG. And that's one thing we're really working hard here at Lynx on, trying to make it a little bit more granular, a little bit more quantifiable, so we can actually understand, comparable metrics between companies. As far as how, industry is doing broadly, I think actually, believe it or not, I think mining has gotten out in front of ESG issues, in part because they've always had to do so, right? As a mining community, we've always had to look out for environmental and social issues. We just have these new metrics and kind of this new acronym to deal with. So, without giving a positive or kind of negative ranking writ large, I would say we're all in this together and we're all trying to figure it out as one. I
think so, exactly. And Richard, over to you. What do you think? I mean, the time and the times have changed since COP26. But what do you think? What do you think are the primary factors in influencing mining companies in their development of ESG, and primarily with Bunker Hill? I think you're on mute.
The first thing clearly is you deny and increase the cost of capital if you don't follow best practice ESG. Whether you're a junior company, explorer, developer, or you're in production. That's for those who are gaining access to capital on the public markets, obviously, or want the broadest access to available debt capital. That's the first thing. So there is this drive to ensure better performance driven by those that are investing. And that's been a big change over the last few years. I think the previous speaker was exactly right when he said that this is something that we're all in together, and there has been an improvement of standards. The only thing I would say, given that we're all being required to do this and are choosing to do it, is that the capital markets are yet to provide us with a lower cost of capital if we're really at the front end of ESG best practice. You're only getting penalized if you don't do the right thing, but you're not getting rewarded for doing the right thing, arguably. And we might see that change happen on a go-forward basis. With specifically to Bunker Hill, not wanting to eat too much or chew up too much of the oxygen here, I'd say that we took over a distressed site, a site that had an operation, very valuable operation, which was mining and smelting, that was shut in 1980-81 because of the environmental regulations that came in between 1969 and 1980. And there was then subject to 40 years worth of cleanup and maintenance until we got involved. And therefore, in that position, the only way you can credibly bring a mine back into production is work towards the best possible standards of what we generically call ESG. And so in that case, ESG becomes not just the right thing to do, but essential for value creation. And when we get the mine up and running, it'll be the first time such a thing has happened in an environmental cleanup site in the United States. So ESG is essential to it.
And following Richard's remarks, Andrew, who's chairman of Q Mines, who says that the company's going to become Australia's first zero carbon mining operation. So, question to you, Andrew: what is the common criticism you think that mining has had with ESG, and what sort of examples have you started to commence with at your assets?
Yeah, look, very good question, and thanks for having me, Charles. Look, I think mining's historically been seen as a dirty word or a dirty industry, and I think to talk about it a bit further, I think there's really a change afoot, and I think the mining industry is leading the way forward, and has had to lead the way forward to really exert its some dominance in the capital markets and whatnot. So I think I'm seeing down here in Australia some fantastic examples of companies really striving to make the change and try and develop their minerals and their businesses in a sustainable way. A couple of things that we're doing at Q Mines, we've got a largely a copper focused mine that we're trying to restart over the coming years. And we've been looking at how can we do this practically, and how can we do it at a reasonable cost. And I think, and the way I would look at it is this is, and I'd sort of echo a lot of what Richard had to say, that I think it doesn't have to cost that much, and I see what is the cost if we don't do it, and what is your cost of capital and those sort of things if you don't do it. And I think some of the initiatives that we're starting to look at include we're just installing our third solar system on site. And that'll basically deliver completely renewable energy for our Mount Chalmers mine, which is fantastic. And I will say we're only at the small end of things. So we've done this with finite budgets and resources. We've just actually installed a renewable fuel storage facility, and we're actually using a renewable fuel in place of diesel in our drill rigs and our utes and our compressors and things on site. And simple things like just hiring locally. We hear in the mining industry this mantra about fly in, fly out workforces and whatnot. I think that's got to completely change. We can procure locally goods and services, and that has a dramatic impact on our carbon footprint as businesses. But obviously, we don't want to just talk about the the environmental side. Obviously, social and governance is important as well. And I think quite often we see it's big E, G, and little S, and what I'd like to see is more focus by mining and exploration businesses on the governance and on the social side of things, because I think they're particularly important. And we've seen recently a lot of proposed mines not quite get there because they don't have that that social license to operate, or they don't have that relationship with the community or the governments and things. And I think these are all key issues that we're going to have to grapple with as an industry. But I think so far, the mining industry, from what we're seeing down here in Australia, is doing a great job. But I'd be encouraging a lot of these companies to start to stop talking about it now and start moving out of the strategy phase and into the implementation phase. And the way I'm looking at it is it doesn't cost that much, and it just takes a little bit more research and things. But there's a lot of technology out there now that is very well known and quite low costs that can help these companies transition. So certainly lots happening in Australia.
No, Andrew, I agree. I mean, I think was it Mark Cutifani? I heard him say, you can't just talk the talk. You've got to walk the walk with ESG, and especially on the corporate end, it has its challenges. And Danny, over to you. I mean, you've got ESG challenges from both sides of the world, so to speak, with your assets in Angola as well as your, with your plans in the UK in Humbersides. How's the company managing that?
Yeah, so I think there's, as you've nicely highlighted there are a number of risks across the whole of the ESG suite. So if we're taking our proposed mine site in Angola, I would think most people listening to the call are very, very familiar with what those environmental risks and what those social risks are, be it working with the local communities, be it potentially any carbon emissions that we've spoken about so far. But some of the things that we're doing to tackle those risks is even in a pre-revenue, even in the position we are at the moment, where we're looking at feed, we're looking at operating costs, we're looking at how we can minimize the cost and impact of what we're doing. Even at that stage, there's certain things that we have applied to our planning exercises. So there are certain external standards. So, for example, we've taken the World Bank's International Finance Corporation performance standards for ESG, and we've made it very, very clear to all those contractors working for us, everybody involved in us, that they are the minimum standards that we expect them to hit. And again, I'll emphasize minimum. We've engaged with local NGOs on the ground so that we can keep good relations with our communities local to the mine, so they're fully au fait with the project, and that they're actually involved in some of the decision making around how the project evolves and how we take things forward. And also, just to echo what Andrew's already touched on there, we've already put plans in place that we want to hire as many people into our workforce from the local communities as we can feasibly do. And we've gone one step beyond that, in that we're not just looking to hire them, we're also looking to put a short to medium term training plan in place as well, so that if the skills don't yet exist in those communities, we're looking to sort of de-risk our business for the future by actually looking to give those training opportunities to those local communities so that we can help them long term as well. And I'm conscious I'm taking a bit of time over the answer.
Okay, no, thanks, Danny.
Yeah.
And Trevor, one for you. If and I need your honest answer here. If you're going to score mining companies out of 10, how well do you think they're doing with ESG strategy at the moment? and what's the rationale behind your mark? There you go.
Yeah, absolutely. So, and big thanks to all the commentators here. I think really great work going on around the world. And to be clear, Lynx is a data collection entity. We're not a scoring or ratings company. We do help codify all of that data into reports. So not skirting the question here.
No, I understand you.
Absolutely. So, we're going to go with a strong 6. So I think, again, I'm proud of the reporting efforts, across industry. And again, there's alphabet soup out there. We've Danny mentioned IFC. There's probably 29 or 30 other standards that we're kind of taking a look at, and how those events assimilate up into those standards. So it's it's tough, and we have a long way to go. And so that's why we're only at a 6, right? We have a lot of work to do to make metrics more detailed, more comparable, more shareable. And that's a lot. We're working across kind of different data sets, right? We're talking about satellite, IoT, looking at social media and things for social license to operate. I mean, it's a big task. So we're at a strong 6, but we got a long way to go.
Thanks. And Richard, could you give us, operating in the United States, could you give us some sort of concrete examples of actions that Bunker Hill's taken and you and the management team have taken that have made a real difference over the last 12 months, and some of the plans looking forward?
Yeah, thanks. Context is important here. The general perception, which is a fair perception in the United States and North America in particular, is that it's exceedingly hard to permit a new project, given the regulations and given the agencies involved in managing the consultation between an investor / company and local stakeholders. That's a fair assessment. And again, a lot of the larger companies who have challenged in Arizona and elsewhere, and people will know those, are in dispute at the moment with regulators and stakeholders about investing in mining. Now, my experience at Barrick showed that, done well, those permitting challenges and the support that comes from it, that's necessary to support it, can be achieved. So I'd say that the general perception in North America is exceedingly difficult, is fair, but exceedingly difficult isn't impossible. That's the sort of strategic context. Within bunker, as I said, we're in a unique situation, and it's a very difficult situation on the face of it, in that you're going into an area that was very rich in terms of mining in the run up to 1980. This has been mined for 100 years, and in some parts of what's known as the Silver Valley, it is still being mined. Hecla has a mine just down the road, as does USA Gold and Silver, but the rest are essentially closed. And prior to it all being shut down in 1980, the environment was devastated, primarily through air emissions, but not just because of that. And there has been 40 years worth of cleanup. So in those circumstances, what we had to do in a practical ESG sense, rather than a reporting ESG sense or box ticking ESG sense, was engage meaningfully with all those stakeholders that had been involved in that environmental cleanup to reassure them that what we were going to do wasn't going to damage the environment, and where was possible was going to even enhance it. Mm-hmm. So the critical thing, and there's a long list of it, I'd say in that, is that we had a mine whose smelting and processing operation had been completely shut down, removed and tidied up. And what people want to know is, when you restart the mine, which we're fully permitted to do, are you going to rebuild facilities that are going to damage the environment? And are you going to make the size of the mine that which will also create great scars on the environment? And the answer in terms of our planning was absolutely not. We will not do that. So we use the existing infrastructure, the access and the facilities and the land that we have to build a mine which deposits its tailings underground, does the majority of its processing underground, and doesn't increase the footprint of the mine beyond that which the closed site already exists. And secondly, we're clearly not building a smelter and a refiner. We're moving the concentrate to a local North American refinery in British Columbia. So the first practical thing we had to do was come up with a mine design whose footprint could be supported by all stakeholders, whether they lived around the mine or whether they were observing it from the outside. And the second thing, because it's a long story, but I'll call it short, is the agency that was so important to us is the United States Environmental Protection Agency, that had not just shut the mine down, but done all the cleanup, and whom we owed money to for unpaid water treatment bills, $20 million. We needed to partner with them to reschedule those payments such that the payment terms could be met by our investors and we could get moving. So 18 months worth of really serious water treatment studies and work and engagement with the agency that was responsible for the quality of the water gave us the understanding and the trust we needed to get the mine running. So beyond all the external reporting, my message from Bunker Hill is, and it goes back to the point you said from Mark Cudefani, is you've actually got to come down with real things that will make a real difference. And then upon all of that, you can wrap your communications.
Yeah.
Long story, so apologies.
And no. I mean, and partnerships are important. And Andrew, I mean, your partnerships with your ESG strategy, does it differ differently from Richard's with regards to operating in Idaho in the United States? That's my first part. And the second part would be to achieve good ESG ratings with regards to influence and implementation and execution. What is that strategy and how does it differ in Australia?
Okay, yeah, I think it's just first part of the question was around partnerships. I think they're largely the same sort of issues that we're facing here. And I think that's right across any sort of, mine site. If I look at our mine site, which is in Queensland of Australia, we're 30 k's off the coast. We've got a historic mine that has some acidic water in the pits. And so, one of the first challenges we've had as a board has been, how do we deal with that water? And we've got this lovely thing off the coast of Australia called the Great Barrier Reef. And so you can imagine the regulators understandably don't want to put that water into the local river systems. And so we've devised a strategy to treat that water and reuse it, within our plans as to redevelop this actual operation. So that's helped to build some trust. So that was the first point. I think similar experience to what I suppose Richard's suggesting. Secondly, we've been, in terms of partnerships, we've got a lot of local farmers in our region. So a lot of these guys are actually working on the mine site. They're driving dozers. They're preparing drill pads. They're manning drill rigs, which is fantastic. So we're providing employment into the local region. We've been, so I think we're only a new business. We only listed in May of last year, but we've already engaged over 40 local contractors. We've got 150 local shareholders. So we've really been trying to work on that community feel. Little things. We're actually sponsoring the local soccer team up around Rockhampton. I know that seems the obvious sort of marketing thing, but it's actually been great. We're getting lots of families and whatnot wanting to understand who we are and what we're about, and you can see it's driving more interest in the business on website traffic, buying the stock, all sorts of things. So partnerships are very important, and I think that's not unique to Richard or our particular business. I think that's quite uniform right across the industry. I'm sorry, I'm going to ask you to repeat your second question because
it was mainly to do with the influencing of ESG with regards to how Q has actually. You've made the partnerships, you've made the relationships with the local community, but how further and wider partnerships across possibly environmental authorities, those sort of things.
Yeah, look, very good point. So we're starting to work with the local regulators now. We're again, like Richard, we do have a disturbed site. Thankfully, we never had a smelter or an operation on site. We had a truck and sort of ship sort of operation where there's no actual treatment of ore on site. So that's really helped us. So we don't have the same environmental legacy. However, because it is a disturbed site, we see it as a great opportunity to obviously, given we've identified a lot more copper and gold under these pits you see behind me, it's a great opportunity to mine at that site because we don't have to disturb another site, as an example. So we've actually, as a business, one of the things that's given us a lot of, I suppose, credibility with those regulators and things is we're now one of only 3 ASX listed companies that's certified carbon neutral under the Australian government climate active standard, which is a real robust rubber stamp in Australia.
Great.
So that's been probably for us a quite an extensive process, a 12-month process, and it's run very similarly to how you get your financial accounts audited for any listed company. And I'd encourage any sort of business, and you'll hear me talk a lot about trying to encourage the industry to, we're trying to really lead from the front, even though we're very much a small cap business. We're trying to show that this stuff is achievable and it doesn't cost that much. It just requires a bit more time and a little bit more effort. But looking at our climate active certification, we've implemented a number of very simple, practical steps to reduce our carbon footprint, and that's been a really on the back of that. Although we've done a lot of good things, whether it's in the community or to improve our or reduce our carbon footprint. We're certainly seeing the benefit in terms of Richard mentioned that the final step is the marketing, and I think. I think as an industry, I think we've improved in how we've marketed the mining business. I think we've got a long way to go still, but I think this whole ESG thing I'm seeing as an opportunity rather than I suppose an impediment to trying to grow a business. So
no, I agree. I think that has to be turned into one's investor relations as well, to how to attract a new type of investor, which I'll come on to in a minute. But Danny, over to you. How do you think a company can look? There's been a sort of box ticking green. They call it greenwashing. I'm sure you've heard that mentioned before. In your view, you're head of sustainability at Pensana. How do you prevent that from happening and ensure that real results are communicated and evidence is shown across to all your stakeholders?
Yeah, you're absolutely right. It's such a challenge, and especially for people who are either coming into ESG or having a look at it, just at the amount of different things that people say might need to be reported. So as Trevor sort of touched on, I mentioned IFC. There are scores and scores and scores of other reporting standards, and they're all pitched at different levels with different outcomes. And one of the things that I've sort of always focused on for us is emphasizing what is the right thing to report. So not sort of getting our heads tied down into one particular standard that might be written for the whole mining industry, or one particular standard that might be written for a particular investment fund to compare various different industries. And I think that for me is actually a good way to go, because it means that we look internally at what are our biggest business risks, what KPIs can we put forward and demonstrate publicly to give confidence to investors and to our end customers that we are taking those risk areas seriously, we're having positive trends, or we're moving in the right direction with what we're doing. But also as well identifying those metrics or those qualitative narratives that can actually demonstrate where we're having a positive impact as well. So we're not just talking about, are we addressing the risks? We're actually showing the opportunities and the benefits from what we're doing. And that's not just necessarily in the mining activity. For a lot of us as well, it's about actually the end impact of what we're taking out to the mines. So for our example with rare earths, they're a really important product that we're going to need to facilitate society decarbonising, as needing wind turbines, electric vehicles, all the motors that are going to need these parts. And I think that's something, for me, it's about demonstrating what's right for us, capturing the right KPIs to demonstrate we're taking the right risks seriously, but also talking positively and telling the positive story about what we're actually contributing to. Yeah,
no, interesting. And I am interested to know, Trevor, with regards to the Lynx, how does Lynx collect all this data, like Danny was talking about, all the KPIs, the evidence that all the corporates are trying to ensure that is well communicated to across all their stakeholders, investors and shareholders and so on. So how does Lynx collect the data from all these different sources? And are you more of a collection platform or just a reporting one?
Sure. Yeah, and completely agreed with the comments about greenwashing, but also the opportunities to express the good work that's going on the ground. So yeah, Charles, thanks for the question. I mean, we do it a couple different ways. So really the most important part is allowing our customers to create a log of record, right? What are these ESG events that are happening on the ground? How do we quickly categorize them and classify them into groups for later analytic use, later on, right? So that's just the bottom up logging of events, putting them into ESG related categories, and then attaching those to different standards is really the core of what we do. But we're working on some really advanced inputs as well as part of external due diligence and verification too. So we can look at things like deforestation and tailings with satellite imagery, which is widely available, becoming cheaper all the time. Look at things like water quality and effluence with sensors. And the social license to operate, I would mention, is probably our biggest task, and the one that I enjoy working on from a data perspective the most. Because how do we capture that, right? We have kind of international narratives that happen on social media. I can recall a pilot that we did for an asset in Eastern Europe, and there were protests around mining there in DC and LA, right? So we can capture this kind of broad social license narrative, but also on the ground, not everybody's using social media, right? So if we think about some of our folks in Peru in some more austere areas, they're not on Twitter, right, expressing grievances. So we're looking at things like surveys, we're looking at things like radio, we're looking at things like empowering community managers when they go out in the field to, again, allow to upload that sentiment through reporting on the ground. And so it's a complex task, and I've mentioned probably 3 or 4 different really disparate data categories, but working really hard to standardize them, make them comparable, and attach them to some reporting standards. So we are not a reporting entity. We really want to give our customers the tools to collect as much ESG relevant data and to classify it That's our goal, because that's going to be, again, what creates kind of the most impact on the ground. And then, when it's time to go talk to finance, insurance, look at operational risk, we have that data ready to go, and can start to report on it.
And Richard, thanks for that. No, that is very clear, and I'm sure a lot of corporates are actually looking to try and get that data from you. But Richard, I mean, as an executive chairman of Bunker Hill, how involved should the board be and the senior management team? It can't just be on your shoulders. So how involved should the board be with regards to implementation and execution of Bunker Hill's ESG strategy?
I mean, in terms of you're crafting the future for the company, there's the future of the company doesn't have a future if ESG isn't central to value creation. So there isn't, you can't put a separation between board responsibility, management responsibility, and people on the ground. It's absolutely essential. And I think it probably is to any mining company that looks at this seriously. We have the advantage of being small in that we aren't managing multiple issues. We can put all of our energy into this. And I'm listening to Andrew with his experience in Queensland. He clearly got exactly the same focus as we have. And so it's essential to that. And that's all the inward piece. The external piece is, and I know you're going to touch on it later, Charles, it is about how do we attract new types of money into mining, even with our very ESG central strategies. It's still incredibly hard because mining is still dirty. Again, I don't want to exaggerate, but the very many, more than 20 impact funds that I've spoken to try and bring them into this project, we've been thwarted because we're mining. If we were solar powered business or whatever, then they'd be interested. But without us doing what we're doing, none of those solar power businesses and so on and so forth will have the metal necessary to drive it. We all know that argument. But until the capital markets, which has a particular, and the slice of it that's looking for positive impact, sees mining as something essential to invest in, we haven't achieved our mission yet. So I wanted to sort of make that point, because it's not just making sure we do the right thing, it's making sure we attract the right capital at the right cost that starts to change things. And impact funds are not putting money in mining yet. And there's a very interesting question that should be asked about why.
And I think you're right. There is a massive lag time to try and attract that new source of capital. And it's not just because you're trying to attract a younger type of investor. I don't think the mining fraternity has done enough yet to actually give that new investor source enough evidence to start looking at mining as an investment class. And Andrew, over to you. What's your view on this? How's it in Australia?
Look, it's a really good point you raise, actually, because I must admit we sort of are seen as leaders in this space, even though we're very much a small cap business, and yet we do trade at probably par with a lot of our peers who aren't nearly as savvy in this space. And I think Richard raised a really good point. And I would encourage investors who are listening to this podcast, to go out and invest in the companies that are actually leading from the front. There's two sort of sides of this argument. One is you hear a lot of fund managers in this space say, well, we can use our capital to force change, be activists and whatnot. But I would actually I would discourage that, and I would say support the companies that are leading from the front. They're the ones with the will and the passion, to really make this change. And we all know about Darwin and Lamarckian's theory of survival of the fittest. If the markets are efficient, let the management teams who really have a good grasp of this, take these businesses forward, and these other businesses that, and I think that's the ultimate, shift that we need to create here. If like Richard's, like Danny's, and like ours are trading a premium to our peers because we're capturing more capital, well, that's the ultimate incentive for others to catch up. not the other way around. Let's not, so I think, if you reverse the way to look at this, I think you've got to invest in the companies that are doing this and are acting now, not the ones that are talking about it at the strategy stage. Let's start investing in the ones that actually are at the implementation stage. So I think that's the key point that I would make.
I think so. I totally agree with that. And Danny, just sticking on this point. I mean, how is Pensana? I mean, Pensana is, as I say, has got assets in Angola, a long way away from the Humber in the northeast England. So, how are you attracting that sort of new source of capital? Those generalists, the younger type of investor, call them Generation X, Z, whatever. How is Pensana coping with that?
Yeah, I think you're absolutely right, Charles. It's something that's definitely a growing trend, and it's not just in the mining sector as well. I mean, I used to work in the power industry, which is another example of a sector that had a lot of negative connotations around it, and that was, as I say, a lot of companies leading from the front, taking the lead on that decarbonisation agenda. And I think the same trends will start to appear in mining, and in our case, both the mining and the processing, that it's about putting the right narratives forward to appeal to these people. And as we've already said, it's not just about one company doing it, because we often run into these barriers where people say, well, mining, that's a big red X before we've even started, regardless of the detail, regardless of what the end products are moving towards. And one of the things that I will often talk about is a concept of net gain. So we'll often hear it applied to biodiversity when people talk about biodiversity and wildlife net gain. But I think there's also potential when we're talking about whether it be life cycle carbon, whether it be societal net gain, because if we look at things like solar panels, we look at mobile phones, communications, all of these critical metals, as critical minerals, are absolutely part of these products. And I think we, as a sector, I think we can keep pushing that message and say, actually, yeah, there's mining, but the mining sector is being sustainable. We're taking all the right steps. And actually, I think without some of this mining taking place, a lot of the other activities that are needed to decarbonize society would potentially struggle to happen.
I think so. I think you're right. I think, and just leading on from those key value drivers, one for you, Trevor, with all the data you're collecting, what do you think the investors if you're going to say, okay, what aspect of ESG for the mining sector is the one that stands out? Are we talking about a social license to operate? Are we talking about environment? How would you prioritize that?
Yeah, absolutely. And it's a big challenge. I mean, we were in New York a few weeks ago talking to some finance entities, and really tailings and water winds up being massive right now in the conversation for a lot of obvious optical reasons, based on past events. I think what we try to do is categorize those line items. So under E, you really have dust and explosive vibrations, deforestation and biodiversity, water and tailings becomes primary. That S piece, though, I think is very, very important, and perhaps the most important, right? Because we all know the kind of business discontinuity that can result from a lack of the social license to operate, right? We can have really all of our kind of best practices environmentally in place, and that perception and behavior by proximate communities can still dictate outcomes regardless of those best practices. So that S becomes absolutely primary. And yeah, just want to agree with both Richard and Danny. I mean, pointing out the paradox of the fact that we absolutely must be mining more of these 50 critical and rare earth minerals around the world if we seek to truly decarbonize our economy. So it sets up this big paradox, and one that we really try to support industry in wading through, especially on that S side, right? Social license just becomes paramount, I believe.
Okay. A sort of more of a macro economic question for Richard. I mean, we've seen obviously the war in Ukraine. We've seen rises of precious metal prices and also oil and gas prices as well. So do you think that the present situation is going to derail, I suppose that's too strong a word, but dampen the green energy transition in the mining sector? What's your view?
I think what's happened, the tragic events that's happening in the world are understandably focusing everybody's attention. But they are temporal events. This war, as dreadful as it is, and God willing it doesn't last too much longer, will end. The challenges that the world faces before this war started, climate change and so on, should you believe in that, which I do, are enduring. It's what the first point. Second point I'd say is that, ever since, I joined the workforce in the 80s, the world has been benefiting from the supply of cheap metal created as a result of the economies of scale that are generated by globalization. And it's only been in the last, 5 years or so that there's been a question about the benefits of that, some of which are justifiable. Cobalt mined by children in the Congo is unacceptable by anybody's standards. And that needs to change and continue to change. But what we have been seeing is a wish to bifurcate the global supply chain. So we have a China-dominated part of the supply chain, and we have a Western-dominated part of the supply chain. That is, by economic definition, inefficient. And what's going to be interesting with respect to the 3 pressures on us all, or 4 pressures on us all, beyond just this war, and the pressures of climate change, the questions of efficiency in terms of metal that can be priced at a rate that sustains manufacturing of essential goods, pressures that ensures that metal is produced globally in ways that doesn't damage the environment or exploit humans. All of those pressures are going to endure. And so as miners, we shouldn't be distracted by this awful events that are going on in Europe right now, but maintain our consistent and enduring focus on ensuring that metal can be produced economically in ways that doesn't damage the planet. Because regardless of how this awful thing emerges in Ukraine, that's going to endure hereafter. And again, I hope that doesn't sound like I'm sitting on a pulpit and dreaming that the world was tidy. I'm not. I'm just saying that that which has been driving us to the point that gets us to the discussions we're having right now will endure beyond the temporal disaster of this ongoing war.
It is challenging times, and I agree with you. I don't think you're sitting on the fence or in a pulpit at all. I think you're right. I think it's all about mining has to change its way, and to do that, it has to collectivize and help each other in that. Everyone will still need to have a car, a building, a TV, whatever it might be. And therefore, there's a massive future for mining. And gentlemen, thank you all very much. Sadly, we've run out of time. Danny, Andrew, Trevor, Richard, thank you all very much. And I wish you the rest of a very good day. Thank you.
Thanks, Charles.
Thank you very much.
Thanks, Andy.
Thank you.